Hello and welcome to the quarterly update for the core growth portfolio for March 2019. I'm Evan Lucas, our Chief Market Strategist, and this I really want to highlight as one of the interesting movements of the quarter and probably the ones that we've seen over the last sort of 3 to 4 quarters. The core growth portfolio very much diversified the way you'd want to see and take advantage of the last quarter. Has about 30% to defensive, the rest towards growth, and growth really did take off at a big rate. Up 9.04% after fees, and that is probably, again, down to the fact that at the moment there is something that we basically haven't seen for over 50 years, which is where something very uncommon is happening, where the bond market and the equity market are going together. They're actually appreciating. The reason the bond market is appreciating is actually probably for a negative reason, the malaise that's going on in global growth, whereas the equity market's moving up on the possible cure, which is stimulus coming from monetary policy side, not just here in Australia, but globally. That needs to be highlighted because clearly there were 3 main reasons why the last quarter moved quite strongly for us here on the core growth portfolio. China is one. The China story looks like it's really starting to expand. Have a look at commodity prices. They really did take off and was a major contributor to why the Australian side of the portfolio, the IOZ, really did jump up along with VQZ, which was moving quite neatly on the back of global growth stories and the fact that stimulus is coming. Looking to the other side and then also looking at things like property. Property also had a very good movement. Being a bond proxy, the fact that it's offering you a net yield, if you look at it individually, of around about 5.5 to 5.6% is very much an attractive thing. It actually saw REIT listed in Australia being the best performing sector. And that also explains why the VAP part of the actual portfolio did quite well as well, is that property is seeing quite a big inflow at the moment as people move towards bond proxy plays as risk grows up. We are aware of that, and that needs to be pointed out, is that risk is building. There is clear signs that growth may slow down globally, and we are therefore possibly aware that the growth portfolios may see a little bit of pressure. But overall, if you continue to hear the probability of stimulus at the back end of 2019, the core growth portfolio will continue to perform very strongly in 2019.